I'm going to recap two stocks and two ETFs that I talked about over the weekend. But first, I'm going to break down Tesla on the 5-minute time frame. It really tanked today. We ended the day at $241.05, down more than 6%. To the north side from where we are takes us back to the middle of the trend, and that is roughly 248.10. To the north side of that at 2 standard deviations is 255.76. 259.67. A gap forms to the upside at roughly 261.86 and closes out at roughly 4 standard deviations, which is 264.13. Now, to the south side from where we are takes us to negative 2 standard deviations, and that is roughly 240.55. But because we are right here along this line, I do anticipate a bounce tomorrow at support. Now, another level of support to the downside is negative 3 standard deviations, roughly 236.64. A gap closes out to the south side at roughly 234.98. And finally, at negative 4 standard deviations, roughly 232.83. So we could grind down around here, or possibly here and here. This is one level of support, support, support. But we do have a gap closure, so the likelihood of us going even deeper south is pretty great because there is another gap to the south side starting at roughly 226.28 and closes out at roughly 222.12, and then another gap down here, but we're not in that channel yet, but I just want you to be aware of that. Now, taking a look back, this gap right here closed to the downside at 249.97. This one closed to the upside at 259.35. But last week on Friday, we hit this zone right here. And whenever I see that happening, I anticipate a sell-off as people take their profits and they run. This is a sell zone, another sell zone. Resistance, resistance, resistance. But if we are up here and we start to fall, this turns into support, support, support. So it cratered and then bounced, and then, it whips you around, gets you all upset and emotional. And then what does it do? It grinds up right here. This is a buy zone. This is a level of support. And we are here at another level of support. So I do, again, anticipate a little bit of a bounce, but eventually I think these gaps will close out. It may take quite a while, though. All right, so let's take a look at a stock that I talked about previously, TSLX. And thank you to Marat for pointing this out. We ended the day at 2 standard deviations, which is roughly right here 1826. Let me fix that really quickly. All right. To the north side of that is roughly 1833 and 1840. I do anticipate some consolidation or selling off because we are at resistance right here. Now, to the south side from where we are takes us back to the middle of the trend, and that is roughly $18.10. At negative 2 standard deviations, that is roughly $17.95. 1788 and 1780. Now, note the 1-year price target that I mentioned previously is $20.75, up 13% from where we are. And note here the dividend payout, a whopping 10.15%. That is extremely high, and that is why Marat is interested in this play as well. It pays a great dividend, but of course, with a great return, there are higher risks too. So just be careful if you are trying to either invest in this stock or perhaps just day trade it. Now, the next one is ARCC. We ended the day at $18.27, nearing resistance here. And at 2 standard deviations, that is roughly 1837, 1851, and 1865. To the south side, back to the middle of the trend, takes us to roughly 1811 and 1783, 1770, and finally at -4 standard deviations, roughly 1756. The 1-year price target is $20.44. Return of 11% should we get that high, but we're very close, so I don't see why we couldn't. Now, the dividend yield, extremely high here as well at 10.65%. Now, let me show you the RSI. We are hitting this key level here at 30. So I anticipate a bounce here. This is the oversold zone where people like to buy the dip, even though we're high up here. So I do anticipate just grinding up a little higher and then eventually hitting our price target of $20.44. And now let me go over very quickly. Schwab US Large Cap Growth ETF right here. We are at -2 standard deviations to the north side of that at the middle of the trend or the median, 73.09. If we head north, there is a gap to the north side that starts at roughly 73.39. 2 standard deviations is roughly 73.70. The gap closes out at 73.89. 3 standard deviations is roughly 74 and 74.31. To the south side, -3 standard deviations is 72.17 and 71.86. We are also at a key level here on the RSI, and I do anticipate a bounce because we are at support here. It could go lower or even lower than that, but will eventually go up because people will buy the dip. And this RSI right here is also at a key level, as I mentioned. The next one is the Spider Portfolio S&P 500 ETF. We are sitting right here to the north side from where we are. Takes us back to the median or the middle of the trend, and that is 50.84. A gap forms to the upside at roughly 50.94. 2 standard deviations is roughly 51.02, 51.10, 51.19. Oops, and it's not going to stop there because the gap closes out at roughly 51.27, and it may not get there tomorrow, but I think eventually it will happen. Most gaps do close out. Now, taking a look at this, just looking back, you can see a sell-off as we neared resistance here. I do anticipate, as I always say, a little bit of a sell-off as we hit a key level, which is resistance, 2 standard deviations. And note here, the buy at -2 standard deviations. People are buying the dip and selling the rip. And you can do this over and over and over again. And note, for the most part, stocks and ETFs tend to stay in this zone. You can play this zone, but anytime you get out of this zone, that is a signal if you're day trading, swing trading, to get out, because I know there's going to be a move to the downside. It could go like this again, and then eventually back into this channel. All right, that does it for me. Thank you so much for watching.